Hello, and welcome to the Liquidity Event.
What's up?
How's it going, Shane?
It's early.
It is early. We typically will be recording in the evening, but this time it's very early in the morning.
It's very hot in New York in the middle of the day.
You may hear some sirens go by. That's going to happen. We're in Brooklyn. We love it here.
I lost my coffee.
I'm sorry. This is Liquidity Event, so we will be talking about the beverages that we're drinking this morning. It's a combination of sparkling water and coffee.
Yeah, black coffee.
Yeah, always. I taught myself to drink black coffee because when I lived alone, I used to drink coffee with milk. But when you live alone, you can't go through like buying a whole jug of milk. It just like goes to waste if you're only using it for coffee. So I trained myself when I was super broke to not drink coffee with milk. And that's why I drink black coffee to this day.
That's one of your bougie things that you just couldn't make happen.
Well, that's like
I think
was,
you're like a soy milk or an oat milk girl.
No, I actually despise oat milk. It like doesn't taste very good to me.
Out of character.
Is it out of character? Yeah, I guess it is. I'm kind of bougie. Yeah, you'll learn that about me, folks. Slightly bougie.
So this is an introduction to us and to the podcast in general and what we're going to be trying to do with this podcast. If hopefully you're watching this podcast has been running like 3 years at this point. You're coming back to the beginning. But for those of us just at the beginning, we just wanted a DTR, define the relationship, not DTP, define the podcast.
Oh, yeah, DTR, yeah. There's also woo-woo, which is like, what's up with us? So like when you start dating someone and it's like, 2 months in, it's like, what are we? Should we woo-woo tonight or should we DTR, define the relationship? So yeah, let's DTP.
Why do you have all these single acronyms? You know them so well. The other day you said I was going to Aptivate because I was breaking.
Oh, that I just made up on the fly. Yeah, Aptivate.
So good at that.
After when you like become single again, you got to activate all the apps. You Aptivate.
That's so good.
It's pretty good. Yeah. Hashtag Aptivate.
Hashtag Aptivate. Throwing rocks already.
I'm married, by the way.
Yes, been married a long time.
All right. So who are we? What are we?
Brooklyn FI is a registered investment advisory firm. We have a number of financial planners that assist AJ and I, who are the co-founders. We have mixed backgrounds, but we came together about 4 years ago at this point, which is 2017, to get together and start a registered investment advisory firm, originally focused on creatives, but the niche famously pivoted towards tech professionals and financial, those that have equity compensation.
Yep. It's weird that we're coming full circle because literally the first time you and I ever met was on a podcast.
Mm-hmm.
So this is weird. It's almost exactly 4 years later where we're, I don't know, getting to know each other again or letting our audience know our unique backgrounds together by speaking into microphones. Kind of awkward.
I love it. Love podcasting. Love talking about myself. Love vanity. Love telling my story.
What is podcasting anyway? Yeah, so Brooklyn FI, we started this company 4 years ago. It's grown a lot. It's changed a lot. But why did you start Brooklyn FI?
Oh, well, I was a tax guy and I love solving people's problems. I didn't originally, accounting isn't, in my blood, so to speak, but I got into the field because it was challenging and it was a good career. And I realized I could help people by solving their problems. And I realized I couldn't go further than their tax return without founding a registered investment advisory firm to provide investment advice and touching on insurance and retirement and investments, of course, with equity planning. And that's why I got into it, and I love it.
Cool. Still do?
It's a journey.
Yeah.
What you like doing changes as a business owner. You go from actually seeing the clients to not, which is a weird transition, but hopefully some clients are listening to this, and it's another way to reach them.
Yeah, our clients are awesome, by the way. We have the best clients at Brooklyn FI.
We do.
Yeah. So you're a tax guy. What is that? What does tax guy mean? What's your actual background?
Well, master's degree in accounting from Ole Miss, and then PricewaterhouseCoopers for about 3 years. It's a big four accounting firm, one of the big boys, or big girls. Things are girls now.
Yes, everything's a girl. The stock market is female, by the way.
So can I say one of the big girls?
Yeah.
Okay. So,
yeah, one of the important, impressive big girls.
All right. So PwC is one of the big girls. Did 3 years there working auditing and doing the taxes for technology firms, being on that side of the table, and then went to a mid-sized firm in New York City. For about 3 years, I worked with individuals and small businesses before founding a small company. So I went big, medium, to small, and now I'm trying to go in the
And now
opposite
you're
direction.
just right.
Now I'm just right, but
The goal.
I'm taking my small company and trying to make it medium.
Yeah. It's weird how much the Goldilocks and the Three Bears fable comes up in our line of work, because we talk about Goldilocks things all the time. Like, when we talk about equity compensation, which we'll get into in a minute, but like, what is the right scenario for you? Like, is this exit strategy like too fast, too slow, or is it just right? So we talk a lot about like, yeah, that fable comes up like so many times.
Speaking of fables, you want to give us a little bit of background on yourself there, AJ?
Sure. Nice segue.
Nailed it. Boom.
That was kind of the wrong sound there, but yeah, we have a soundboard, which we're very excited about. Maybe this one. Oh, there we go. The green one.
All right.
What's my background? Yeah, so I didn't grow up in finance or tax. I grew up in, as you can see from our background, music journalism. So I worked in
For those of us that don't have video, there's a wall of vinyl records behind us, like hundreds of them.
Yeah. Some of them are mine. Most of them are, well, it's like mostly my husband's, but I've got a sizable collection as well. Anyway, yeah,
to me, it looks like
it's a lot.
It should be in the stock market. All that money.
It's insured, don't worry. By the way, if you have collectibles, make sure they're insured. Okay. Hot tip right there. So I started in book publishing, worked on a book series called 33 1/3, which for those of you may or may not know, that refers to vinyl, the speed at which vinyl records are played. Did that for a few years, loved book publishing, didn't like what I was paid in book publishing, then moved to a tech company called Bandcamp, which combined my love of music and my love of editorial. Worked on their editorial digital magazine called the Bandcamp Daily, did some press for them as well, so worked a little bit in PR. Loved that job. Amazing company to work for, amazing mission. It was while I was working at Bandcamp that I met Shane, and just Brooklyn FI just became my passion and what I wanted to do with my life. So left Bandcamp about 4 years ago. Here we are. Now we're rocking Brooklyn FI. So that's how I came here. I think the part I skipped is that I spent about 2.5 years going back to school, getting a bunch of designations. The most important one is the certified financial planner.
It's concurrent with working for Brooklyn FI though. Yeah.
Yeah, which you also have. It's super important. CFPs are awesome. It's a very well-rounded financial education. Mm-hmm. So here we are at Brooklyn FI, and now we're doing a podcast.
I got a hot question for you.
Oh, no.
What was your first job? What was your first salary? You said, what was that book publishing salary is what I'm curious.
Oh, it was $28,000. Yeah.
And you lived in New York City?
I lived in New York City. But when you make $28,000 in New York City, you can't have one job. So I had 3 jobs. I worked in book publishing as an editorial assistant. I was a bar back, and I also did some freelance writing on the side. And I think, like you do like weird odd jobs for like family, where you'd be like, grandpa, like, build your website or whatever for like $500. So that really helped those first couple years in the city.
Funny.
Ate a lot of rice and beans.
Funny.
That's when I learned to drink black coffee. Actually, no, it was after that because I had roommates at that time. It's when I lived alone that I learned to drink black coffee.
AJ with roommates. That's fun to imagine.
I had 4 roommates once for a long time.
It's very hard to imagine.
Yeah.
Since you asked, my first salary was $48,000.
Oh shit!
In Austin, Texas.
That master's degree really paid for itself.
Master's in accounting. Yeah, no state income tax in Austin, Texas. So it went a little bit farther. I was thinking my very first hourly wage was $2 an hour.
Like way back. First job. What was your first job?
I was at Chili's. I was a bar back or a, what do you call them? Busser.
Yeah.
At Chili's.
Nice.
Imagine $2 an hour.
$2 an hour. Yeah. Did you get to split tips?
Yeah.
Okay. So.
Yeah. It wasn't like.
Right. It was like.
It wasn't Great Depression time.
Yeah. It was like, how old are you?
I wasn't born in 67. I was born in 87.
Word. Yeah.
I'm a vampire.
Yeah. It's cool. Makes sense. My first. I mean, like, aside from, like, babysitting and, like, lawn mowing and all that stuff, like, cash under the table stuff.
No, you have a boss. Yeah, the first one where you could get fired.
Yeah, when I was 16, I got a job at the local independent bookstore. And
of course.
It was awesome, honest. Like, that was, aside from Brooklyn FI, of course, that was, like, the best job ever. Because I was young, got to hang out with, like, really smart older people who, like, taught me so much about life and the world and books and how to be a good human, how to be a bad human, too. It was in Beverly Hills, so...
Independent Beverly Hills bookstore. That's our next podcast.
Why do taxes matter, Shane?
Taxes? Why do they matter?
Why do they matter?
Well, taxes matter for a few reasons. My opinion on taxes, like what we're going to be talking about on this show and why we're even bringing it up, why do they matter? Well, for two main reasons, I think, is that taxes, they run our government. So there's like political implications of government, and listeners to this podcast will not be, we lean a little bit left, and then it's going to be pretty obvious when you listen to this podcast. We're not going to be, beating a dead horse and being overtly political and whatnot on the podcast, but taxes are political by their very nature. It's how we run our country, and it runs through the government, which is a political issue. So that's going to come up a lot. But taxes also matter because they make up, it's one of the biggest expenses that Americans have. I mean, relative to European countries and other countries in general, we have a lower effective tax rate than most countries, but it still eats up the majority of our citizens' income. It's, between 15 and 30%. I mean, the only other thing that you spend as much money on is probably your housing, right? If you have a big mortgage or your rent in a big city, hopefully, you don't spend more than 20 to 25% of your income on housing, but taxes are going to be up there, number one or number two. So it eats up so much of your income that it's a really good idea to know how they work and know how to approach taxation.
Yeah, I think one of the first things I remember you said when we first met in the beginning of my journey was, you have to pay taxes. Like you are a citizen and you get a lot of the benefits. So if you're feeling pissed off about a big tax bill, go outside, walk down the street, get mugged, slice your hand open and have the ambulance come. Like taxes.
Just call the cops. just call the police to remind yourself what you're paying for.
Yeah. Taxes. Yes. Maybe a lot of folks aren't stoked that a lot of their taxes go to the military budget. This country spends a lot on that. But unfortunately, you cannot include a letter on your tax return that says like, hey, I want all my money to fund public schools, not the military industrial complex. So the way that you express your power is by voting, right? Getting the people in power who are going to allocate your money in the way that you want it to be spent.
Yeah. Yeah. I was going to do some sort of commentary on like, when's the last time you worried about someone invading New York City, like the Northern Atlantic? That sounds like I'm pro-war and like pro-defense, but like, I guess that's kind of another take on it. Like the Philippines have to worry about China all the time.
Right. Yeah.
We don't have to worry
about an invasion, but definitely worried about like terrorism, like an attack on New York City. That's scary. There's all that, you see like a bunch of cops in the subway. It's like, oh shit, what happened?
Okay.
Yeah. Ooh, that took a dark turn.
Yeah. Shouldn't have done that. But we'll be taking dark turns here on this podcast.
There will be some dark turns.
Just exploring things live.
Yeah.
I'll keep it real.
Yeah. So look, this podcast is called the Liquidity Event. What is a liquidity event? I feel like we should define that.
Yeah. You want to take it?
Sure. So a liquidity event is when your company or when a company is either purchased or goes public. It goes from being privately owned to then having liquidity, meaning you can take money out of it. So the most common liquidity event is that a company is acquired, right? A small company, let's say it's Bob's lawn mowing business, is acquired by, Lawn Mowing Incorporated. That's a liquidity event. Bob, who previously owned 100% of his business, now has liquidity because the mega corporation paid him, let's say, $1 million for that business. That's a liquidity event.
I love this example.
Right?
I love that we have actual examples in our client base, and you went with Bob's lawnmower.
Well, that's the simplest one. We can work our way up to the more complicated liquidity events. You could also have a merger, right? That's a liquidity event. Mergers and acquisitions, M&A. We'll talk a lot about that. We like to call it TNA sometimes.
That was a hot one.
But yeah, like the liquidity events that we're talking about are generally companies going public and providing liquidity for the shareholders, which are going to be, for the most part, the founders, of course. But when companies go public in the modern age, generally there are a lot of employee shareholders. So most of our clients are employee shareholders. Let's take an example like Asana. Asana is a great software tool, helps you stay organized, make to-do lists. So Asana goes public. For years, Asana was a privately held company, had a CEO, was granting stock options to its employees. Employees had they had these stock options that were basically worthless, right? Because there was no market, there was no liquidity for them to be able to pull that money
No one
out
was
of
buying them,
Asana, right?
Whether because they didn't want them or because there was no legal or accounting way to transfer the shares.
Exactly.
Right. They were locked up.
Yeah.
Illiquid.
Exactly. But then we
Like
have
a stone.
Like a rolling stone.
Like, no, do a Star Wars reference. Like Han Solo and Jabba's.
Oh, Frozen in the Kryptonite?
Yes.
Or not the Kryptonite, Carbonite. Sorry.
Carbonite.
Yeah. So Han Solo is like chilling out frozen in the Carbonite.
Right.
Oh, this is a good one.
You're welcome.
That is a private company, right? You own stock options. You're like hanging out frozen in this like shitty block of liquid carbonite. Then your girlfriend comes along dressed as that bounty hunter, keys in some things on the magic code, and all of a sudden it melts away. That is a liquidity event. That is the company moving from private to public markets.
So wait, in this analogy, is the girlfriend Goldman Sachs or an underwriter, or is it actually the market, the stock market?
I think the
stock market is
stock market. I think the stock market is Leia, is Princess Leia, because the market has demanded that this company go public. There are public shareholders who want a piece of this company. So they have spoken and said like, hey, CEO, aka Han Solo, like it's time for you to go public. It's time for you. We have all this money we want to give you. We want to invest and help you grow your company. So I'm going to punch some numbers into the side and I'm going to free you from your Carbonite private.
What if he was having like the best dream for like 1,000-year blissful dream, and then
I don't know.
Do we know that? Is that canon? What was going on with Han?
I don't know that. I don't go that deep.
Okay.
All right. So liquidity event, as we've defined, is Han Solo melting out of the Carbonite. But what it really means is it's your company going public, and that's what we're going to be talking about on this show. What happens, leading up to that moment? What happens at that moment? We're going to be talking a lot about like what actually happens on the day your company goes public. A lot of crazy shit happens, and it's always new, and it's always crazy, and
that's
it's always
the technical
shitty.
term.
Yeah. Crazy and shitty. Yeah, that's the technical term for IPO day. And then what happens after, right? That's what we'll talk a lot about is like, taxes drive so many of these decisions we make about how we handle the stock options that we have in a liquidity event, right? So they'll come up a lot.
The next bullet point on the outline is why you should trust us.
Well, we know a lot about Star Wars and Lord of the Rings, so in my book, that's good enough.
A lot of Lord of the Rings analogies will be used on the podcast. Apologize in advance.
Yep.
Why should people trust us, AJ? How many IPOs have you handled in the last year?
I don't know, 20?
Right.
Maybe 20? 25?
How many more IPOs is that than each of your listeners will ever experience?
25. Yeah, I think that's a good reason to trust us. We've been through this before. What I tell all of my clients is, going through a liquidity event is like 10% taxes, 10% what your goals are, and the other 80% is just emotion, and just like taking the emotion out of it, because it is so emotional, because you go from looking at a piece of paper or a computer screen that has worthless stock options to all of a sudden potentially, millions of dollars literally overnight. The switch gets flipped, the bell gets rung on the stock market, there's a public market, now you're a millionaire, congratulations. That's incredibly emotional. And for a lot of our clients, they've never seen or never even dreamed of being millionaires, and it literally happens overnight. It's almost like more shocking and more emotional than winning the lottery, because like you're buying a lottery ticket, like you're prepared, you got like your list, whereas like an IPO, you never know how it's going to go. Lottery is like, I'm going to win $87 million, which is probably going to be about 42 after taxes. Cool. With an IPO, that price is like bopping around. You're riding this like roller coaster. So why people should trust us? We've been through this before. We've held a lot of hands. We've helped a lot of really, really, really smart people who understand the complexities of equity compensation. And then it comes to the IPO, and like all that goes out the window, because it's just it's overwhelming. It's really emotionally overwhelming. Like I've cried a lot on IPO days with clients, mostly because of platforms breaking down, them not being able to sell shares. But look, we have a lot of experience. We've got a lot of we went to school, passed a bunch of tests. I'm a CFP. I'm also an EA, which is an enrolled agent, which is an IRS designation. So I know a lot about taxes. I'm also a certified equity professional. So I know a lot about the rules surrounding equity compensation. What else am I? Oh, I'm also an RLP. I'm a registered life planner, which, helps me emotionally connect with our clients and really help them through this. And Shane, you got some designations too.
Yeah, CPA, CFP, ECA, bunch of stuff. But I think what's most relevant, which is what you've already spoken about, is that we've just been through this. We've been doing this for a long time, and we've been through a lot of IPOs for one, and we've also we've filed a lot of tax returns relevant to all these IPOs. I've got 12 years of experience. I lose track. Time sucks.
Ish.
Yeah, 10 years of experience handling the taxation and the finances for people that have equity compensation and the businesses surrounding them. So we've seen not only what's going on in modern times, but historically how it is related to this. So like, this is how we used to do it. You definitely wanted an advisor to know how things used to happen so that things that are happening currently, you'll have relation to them. And relational learning is very nice. And just having the history and all these things is super helpful, because each of these IPOs is essentially, each company is unique. There's a different board, finance team that is working with the outside parties, whether that's outside accountants or underwriters, or if they're doing a direct listing, figuring out how to do it themselves.
What about a SPAC? That they're
working
wrenching
through
off
a SPAC. Yeah. So each of those things are idiosyncratic. It's not. It's never the same story. They rhyme, but they're definitely not the same story. Is that how that phrase works?
No, I don't know.
Oh, history rhymes. Yeah. History doesn't repeat itself, but it does rhyme.
Rhymes.
Yeah, right. So each of these IPOs definitely rhyme with one another, but they're not the same story ever once. So it's helpful to have someone in your corner, even though we work with a lot of people that are a lot smarter than us, like way smarter than us. Sometimes it's really one of the best things about our career and where we're positioned, is that we get to work with some really brilliant people that are much smarter than us, but they just need help with going through these IPOs and dealing with all the technicalities surrounding the changing tax laws and the changing market and the changing landscape in the legal space as well. So that's what we do for a living, and that's why you should trust us, because we are the niche operator in this space.
True that.
And also how to wind down after the IPO, after the liquidity event. And it doesn't have to be an IPO. It could be a secondary offering. It could be venture capital. It could be private equity. There's a lot of different ways to go from Han Solo to get out of that carbonite, to get liquid with those shares. And we've experienced them all. The IPO is just the most typical one that we'll be focusing on the show, because there's an IPO every month, multiple IPOs typically every month. So we'll be talking about them. We'll be talking about other updates, changing tax laws. Fortunately or unfortunately, they change very frequently. So we'll try to keep our listeners up to date on those, see how it impacts our listeners specifically. Also legal and just fun updates in the world. American Express now allows you to have Clear membership if you have an Amex Platinum. If you're listening to the show, you're either a finance nerd or you want to be. So we'll be dropping little fun tidbits about updates in the personal finance space as well. Yeah. We hope you like it, right? We're going to talk about what we think is interesting, which, is mostly money, right? As it relates to money, but also how it relates to like optimizing your life. Yeah. And I think that's what equity compensation, why I love it so much is, it unlocks possibilities a lot sooner. So there's a lot of talk about like the early retirement space, or the FIRE movement, the financial independence, early retirement. And, going through a liquidity event is just a super rapid warp speed way to get to financial independence. Overnight is kind of an exaggeration, but usually in a 2 or 3 year exit. So, if you had dreams of starting a company or quitting your job, fucking off and moving to Burma, like your company IPOs and you were one of the early employees, like go for it. Go tomorrow. You probably never have to work again. And I think, we named our company Brooklyn FI, and the FI stands for financial independence. So what we're really talking about is how do we get to financial independence? How do we optimize our life to make it better? How do we make the world a better place and live the life we want and not worry about money? Would you say live your best life?
I'm not going to say that because I don't like that. Live the life that you want.
Yeah.
And free from worry.
Yeah.
Don't want you to have anxiety.
Cool. Yeah, so this won't be a 3-hour podcast. This is not the Joe Rogan experience, the Allie Jane experience.
Not the Joe Rogan experience.
I wonder what the Allie Jane experience would be like.
We're about to find out.
So we hope you enjoy the show. Hope you enjoy this intro. And stay tuned for weekly releases.
Yeah, I think podcast hosts at this point usually say subscribe and like and leave us a review or whatever. So yeah, that'd be awesome.
Cool. Yeah.
We'd appreciate it.
You can find us on Stitcher.
I like Overcast. That's my podcast go-to.
Pocket Cast. That's what I'm listening to podcasts on.
Okay,
Yeah.
cool.
Yeah.
Cool. Yeah, our website.
Whatever lets me fast forward through the ads, the best.
Yeah. Our website is brooklynfi.com/podcast. That's where you can find all the deets. And thanks for listening. We'll see you next week. We drop new episodes Monday mornings.
I don't know what this button's going to do.
Oh.
Excellent.